Hey folks, glad you could join us on another episode of Business Redefined. This is your weekly, most comprehensive look at the world of business, finance, and economics. Now, fund management seems to be the new vibe in town. Every other Kenyan is asking me about money market funds and how they get into that space. Is the mojo over? Where's the direction going? We're privileged to have the man in charge of Britam Asset Managers, Barack Obatsa. Welcome on set.
Thank you very much.
Barack, you really went off the radar. What happened?
Lots of cooking behind the scenes.
Wonderful. That's why we're having this conversation, man.
Yes.
Karibu sana. Yes. But let's start from here. So, for the better part of last year, and also this year, Kenyans had this MMF rush. And when the yields began tumbling, Kenyans began asking me, is the party over? Maybe let's start from there.
Yeah.
Is the MMF party over?
No, the MMF party is not over. I think people are probably getting it wrong in the sense that an MMF is a good liquidity solution, is a good place to park your money, rather than a place where you invest for a very long time. So it is where you park your money for liquidity. Yes, there is yield, which might be better than some of the products that might be offered in the market where they are currently. But I do believe that MMF is to offer you liquidity and stability for your liquid funds and to enable you be able to park your money and use it within a short period when you want it to deploy it either for use in spending or basically in other long-term investments. So the party is still on.
So fundamentally, you're saying our investment thesis was wrong.
Well, somewhat, because a lot of people are new in MMF.
Correct.
The growth has been phenomenal. But the way even the MMFs have been known for the last 60, 70 years that they have been, and we are still learning in Kenya, but they have been there in the West for quite a number of years, in the US, starting in the US many years ago, is that most of the investors in the West use them as a substitute sometimes to current accounts.
Exactly.
Or
Yeah.
or to keeping their money idle, sometimes in the bank account not earning. And therefore, we should also start shifting our mindset there and saying, yes, there will be other investment solutions that are also very good that can give you a much higher yield. But the last 1 year was an anomaly.
Correct.
In the sense that the yields just went off the roof. And I know quite a number of our investors or investors in Kenya who went in thought that is a normal return of our money market fund. That is really not the case.
Yeah.
But what I will say is that they will normally give you a much higher return than keeping your money idle.
Absolutely.
Yeah.
Speaking about then the yield chasing appetite, one of the trends which is really catching momentum again in this market is special funds. And considering Britam, the scale that you play, your assets under management, I'm really surprised you haven't made a move in that direction. Is it something you've considered? Is it in the pipeline? What are your thoughts on special funds?
Yeah, so special funds, it's something we are thinking about. However, we also want to reach a stage where Kenyans are educated that special funds carry certain levels of risk that the other normal funds like money market funds or probably simple fixed income funds do not carry. So that if you go to special funds, just understand that there will be periods when there will be downturns and you probably be on the negative because of the nature of assets that are invested in special funds.
And when the upside is high?
The upside is high, yes. So you probably compensated for your risk, but also you should understand that things can get the other side. You can, markets do move the opposite direction. And therefore we are at least trying to see whether people get a little bit more education and understand. But also special funds in their construction are meant for people who have invested for some time and do understand investments, do understand a bit, have an understanding a bit of markets, so that they know that sometimes investing is for a long period of time and you need to be patient. So it is a matter of also timing. But yes, it is something we are actively thinking about. We may not do it in the same way as the market is doing. Obviously, given our long heritage, people have certain expectations of us. And therefore, for us, yes, we expect that we'll do something in not too long a period, but we'll do it probably a bit differently, judging from the education that others will have brought into the market and what we'll be able to give out in the market.
So picking up from what you've just said, because on the entry point question and the fact that you need some level of sophistication in the market, isn't that the very reason why, if you look at the standard special fund in the market, the ticket size is a bit elevated? 250,000 shillings, 500,000 shillings, because it targets a Barack Obatsa and not a Julian Samboko.
So, I mean, special funds, in my opinion, should be for people who have a slightly higher pot than ordinary investors. And obviously, there has been debate in the market whether the current levels that are being offered by players is optimal, in the sense that should it be much higher, basically given the attendant risks that you find in the underlying assets. And my personal view, this is my personal view, it should be slightly higher than probably what I've seen in the market, so that the person who invests in special funds has a bigger portfolio than that. He has properly allocated his assets so that it is not 90% of your portfolio.
Even in the event of a downturn.
In the event of a downturn.
You're hedged.
You at least hedged, and you can afford to live to the next season. But you can imagine a downturn, and this is 90% of your portfolio, and you probably want to use that money for something next year. You probably want to put in, you are paying for a house, maybe it's money that you've allocated that you want to pay for school fees, maybe for your daughter or son, and then next year maybe the money is 30% less or 20% less, whatever it is. Then what happens? Then it's possible that your son or daughter could miss school because of either a temporary downturn, which happens in financial markets, and that's why we say you need to, as you go to some of these special funds, it's important that you have a portfolio, so that it can hedge you, as you said, it can hedge you against some of these downturns. And it's not money that you wanted for the next 1 or 2 years. And that's why we say, like, that's where money market funds come in.
Exactly.
As well, to ensure that that cushion is there. So the money market funds are very key for those ones who have the appetite to take that risk. They can do their due diligence and consider investing there. But I always say, whatever it is, just ensure that your portfolio is very well balanced.
All right. You are rolling out a new strategy, I think. Tell us about it and what can we expect from Britam?
Well, I think we are coming to the end of our strategy this year. So it's been 5 years very successful. So the world has changed. The realities have changed in the industry. Just looking at our industry, for example, because Britam is a group with insurance traditionally being the bigger part of it. A lot of things have changed. A lot of the way products are delivered has changed. So as we craft and finalize our strategy this year for the next 5 years, one of the things you will see is a change in distribution. The way we distribute our products will clearly change fundamentally. As you know, Britam has been the largest has the largest financial advisory network in the country. Manned financial advisory, over 2,000 going to 3,000, so the largest in the country. But one of the things that we are saying is that that alone will not be enough. because the new generations, the Gen Zs and all, Alphas and all that, just want to do their things online,
Yeah.
on their phones. So we have to respond to that.
Yeah.
They probably need their products delivered differently. And therefore, if you look at just our population structure, they are the most, and they are coming. So any business that wants to thrive has to give that a serious look. And therefore, our strategy is going to ensure that we future-proof our business.
Yes.
So yes, we've been very successful, but it's not enough. So we have to transition and get ahead of before even the Gen Zs get their incomes and all that become larger incomes. We need to be there ahead, but also we also want to grow with them.
Yeah.
Yeah. So it's very important we want to grow with them. They have their structure of income is different. They like gig jobs. They earn differently. They do not want to, like me, who stays in the office from 8 to 5. They want to be employed by different people. They just want independence.
Yeah.
And then that's different because in the past, for example, when you take a policy, you want to pay every month.
So you have a standing order.
You're standing order. Your salary comes on 30th, 31st, it's out. Or fast.
Yes.
That's different. So these people earn, their incomes are very lumpy, they are different. So how can you structure their products?
Yes,
So again, curating solutions towards how these people are and how they have changed, that their behavior has changed. So it's unlike what we've had in the past. We have had cases where these people, we quite employ a lot of Gen Zs because Britam has been growing very fast. And they told us, we probably don't need a pension. So it's a negotiation on how. So we think they still need, but maybe in a different way.
Okay.
So those are some of the things that we are looking at, and I'm like, what kind of pensions can we structure for our young employees and maybe the market?
Barack, are you then saying that the traditional policy products that we have been used to, which are predicated on a very predictable installment payment, are likely to be phased out, or what will happen?
Well, I think those are going to be reduced. I think if you ask me, anything that is just waiting for a regular income, those ones are in a few years, those are going in their last legs, or we are going to have those almost evened out with irregular contributions, for example, even on investments. And that's how we've seen our platforms. We've responded to that and saying you can probably be able to curate your investments at whatever amount and whatever time, so that we respond to whatever changes that are coming. So that's going to change, and there's going to be a slow phase out as most of the young people now dominate employment. And some of us are edged out of employment. Yeah. So those are the dynamics you have to respond to in the market. So things are changing very fast. Otherwise, we'll be dinosaurs very soon if we don't get ahead of time.
That's an interesting dynamic to anticipate going forward. But now, I'm really hoping that in the new strategy, we can see Britam and other peer fund managers being a lot less overweight on fixed income. There are so many asset classes in this market, which you barely scratch the surface as institutional investors. First of all, why is that?
I mean, I think it's been safe to invest, and secondly, I think given the macro environment the last few years, we found fixed income actually giving very good returns.
Quite bizarre.
Yeah, quite bizarre.
It's meant to be low risk, low return.
Exactly.
It was low risk, high return.
High return. So with that dynamic, even from a theoretical investment perspective, you're like, oh, I mean, this is almost a free lunch for me, and it makes a lot of sense. If I can get a risk-free rate of 18%, why should I take more risk? So that logic. But as interest rates go down, by the way, if this trend is sustained downwards and stays there for some time, we have no choice but to be creative. And being creative probably means going back to some of the things that we did maybe 10, 15 years ago, where other asset classes now dominate. If you remember, a few years, maybe over 10 years ago, we had a lot of corporate bonds coming up and all, and they were all hyped.
Real estate was also quite
real
something.
estate was something.
Yeah.
But why should you invest in real estate, as our clients ask us, if I can get a higher return in a risk-free instrument and I've taken less risk? So we do believe that we're going to dig more, and the human mind is very creative, and it's a matter of necessity. But I do believe the other opportunities that are there, there are infrastructure assets that are coming up, and these are opportunities that one should look at. And all we need is to ensure we provide them to the market in a way that is digestible. Yeah, digestible to the ordinary mwananchi as well, so that they can be able to invest in them. For example, we have a large energy deficit, and we saw the spikes in usage or consumption of power like 2-3 months ago. What does that show us? That, for example, the energy sector still needs a lot of investment. And that's a good thing with this part of the world that we live in.
But are there bankable assets there in your view?
There are a lot of bankable assets that are there. In the renewables energy sector, there are a lot of bankable assets that we see. And the good thing is that there is demand. Yeah.
So there's demand.
Yeah.
You're saying they're bankable assets, but the horizon of return is so long, Barack.
Yeah.
Unless you're dealing exclusively for pension funds.
Yeah.
Would there be an investment case there?
Yeah. So there's a lot that can be done. So obviously, for unsophisticated clients, unless you are a very sophisticated high net worth client, you probably want to look at assets that are already operating. So somebody has taken this high risk, but now he's just started operating.
Yes.
And as you know, most of these are PPAs, for example.
So they're kind of already de-risked.
They are de-risked.
Yeah.
So some of these things, opportunities can come up. Obviously, one of the things that we've seen is corporate instruments. We don't have a lot of that. And that was born out of history. Some institutions didn't do very well at some point when they had issued bonds and all that. But the main thing, if you ask me, has then been the pricing. So somebody tells you, why should I take a premium of X, which is small, and government is giving me this? From a risk, so that pricing distortion, has made the other instruments not work well. But if the interest rates stay where they are and go down, I can assure you there will be a lot of creativity, and you'll see a bit of diversification in the portfolios.
Tell me, by the way, Barack, are equity funds back? Because for the last 10 years, because of the way the equity markets were, it's like equity funds almost disappeared. Given what you're seeing in the NSE right now, we're hitting a new high every other week. Are equity funds back? Are investors coming to you and telling you, we've been enough on the fixed income funds, we now want to switch?
We are seeing a lot of demand and people asking us questions. Obviously, there has been a bit of trauma in a certain type of investors. The last 10 years, there was an interest rate capping, so people lost big time. Macroeconomic downtowns and instability. So there's a certain crop of investors who got their fingers burnt, or they waited for too long. And the period, as professional investors, we tell them this is for the long term. They thought our long term was too long. Obviously, those ones who have been patient are having a very grand payoff. Having a very grand payoff. But I think they have come back. And what equities need is just some level of a bit of stability on the macros. And we've seen a bit of that, especially on the forex market. Inflation has been tamed. So that has pretty helped. And whereas we've seen foreign investors come and go, but that gives a level of confidence that you can't see in sub-Saharan Africa, that your currency can stay rather stable for 12, 14 months, not
Barely moving.
barely moving,
Yeah.
and your reserves are getting
healthy,
higher,
yes.
healthy. You have healthy reserves. So that is a very good signal for investors, especially foreign investors, that I will be able to come in and the value of my investments will remain the same.
Yeah.
There will be no rationing of
Hard currency.
and which we've done remarkably well as a country. When I compare Kenya with other countries across the world, I think we've done very well in terms of availing currency. So that helps a lot. But yeah, I would say equities are coming back. Whether that is durable, we will see. It's just happened maybe the last about 18 months.
Yeah.
Let's see how durable that is. We've seen offshore markets take a bit longer than that. But I see if we continue this trend maybe for another 12 months, then I wouldn't be surprised what we saw in 2007, 2006, those days,
Yes,
2004,
yes.
when everybody was talking about equities,
And looking for the next IPO.
next IPO, and looking forward. Yeah, premature yet, but if we sustain this another 12 months, then you'll see the way Kenyans we want to be where others are. So
Yes.
we
Okay.
could see that. Yeah.
And we talked about a drastic change in your distributional model under the new strategy. And I'm curious, when you talk about equities especially, this market has tried a lot. We've spoken about fractional trading.
Yeah.
We've spoken about day trading.
Yeah.
Still, we don't seem to be democratizing the equity markets enough.
Yeah.
Where is the sweet spot? What are we missing, Barack?
I think we've done the right things, fractionalization, day trading, and all that. So number one, we need to re-educate our people again. That these things happen, equity markets have downturns, and therefore the past trauma should not impact you. Just get good financial advice, and equities can make you very good money. And that's why we say, but you need to be patient. This is the thing.
That's true. It's
As
a long game.
Kenyans, it's a long game. It's a long game. One needs to be patient enough. Equity markets are patient capital. They need patient capital.
Yeah.
So that's what we lack.
Yeah.
Yeah, and therefore we give up when things go bad, and that's when we should be buying or staying put.
Okay.
Yeah.
All right. I'm being dialed down on our time, Barack. You can imagine already.
Yeah.
Dollar-denominated funds are
Yeah.
really becoming a thing in this market. What's the state of play? How do you see it evolving?
So dollar-denominated funds, number one, they were very popular, especially when we had currency instability and everybody wanted to preserve the value of his investment.
Yeah.
But that has come slightly down. But as much as it has, the rate of growth has come down, there's still some growth. And that growth is being driven by the fact that there are a lot of workers in Kenya, and a lot of the young people, they work online.
They earn in
dollars.
Yeah.
So that's a market that has come up. And we've seen a lot of our dollar funds. A lot of our dollar funds now are, you'll be surprised, they are not dominated by the older folks who are working regular jobs. It's the young people who are working online. Those are the people who have actually invested in most of our dollar funds.
Yeah.
So there is scope for growth there based on that. But again, Kenyans, as they manage the portfolio, they realize that, you know what, you need to diversify your portfolio, not just in instruments, but you also need a currency hedge.
Yeah.
And therefore, quite a number of investors always tell us, okay, I have my 50 million here, but I want some 5 million in USD. Just in case the currency goes the wrong direction.
Yeah.
So it is purely hedging, but also as parents take their children out of Kenya for school, there's that trend where a lot of parents start early to invest in currency funds then they do not have to pay up 4 years down the line for school fees.
Okay.
Yeah.
Do you see much opportunity in private equity as an asset class?
Yes, private equity is good, but it has been a bit difficult in this
Why is
part
that?
of-
Because even given the ceiling CMA has set for players, the industry is still remarkably below it.
Yeah. I think it has reflected the difficulties in our macros because most of private equity players in the last few years went and invested in a lot of companies that were growing. But because of the macro environment, in some cases, has not been very supportive, then it just flows back to the returns that they're able to give. The other has been currency instability because most of these private equity players have denominated their funds in US dollars. So that has affected. The private equity funds that have been very successful have been the Pan-African ones, where they have a bigger pool and they are not tied down to a region, where their strategy is not tied down to a region.
Yeah.
Those ones have been very successful because you have a wider pool where you can choose very good companies that are probably good hedges against, for example, currency, because currency has been a killer
Yeah.
for most of these funds. So yes, your fund is denominated in US dollars, but your underlying investments are all shilling based.
So wrong way risk.
Yeah, so that has been a bit of a problem.
Yeah.
But if you're able to choose maybe a company that does earns half their exports in US dollar, there are not many. So that's why you need a wider pool. And that's why these regional funds have really had a very rough time.
Yeah.
Yeah, but the venture capital market is robust. Still remains robust. It's on the riskier side. It's a smaller tickets, but that one has been a bit more successful with fintechs and we've seen a lot of capital coming in either through foundations and a lot of these investors coming in and investing in some of these companies. Yeah.
Okay. My final question. If someone is watching and they're wondering, why should Britam Asset Managers be my first port of call in case I want financial solutions? What would be your answer?
Yeah, my answer will be, like I said, we have a very large tradition of advising clients. But secondly, our ease of investing. I mean, we have digitized all our platforms. The ease of onboarding, you can self-onboard, you can do it midnight, you can do it all the time. And we've opened this even to our diaspora clients. So they're able to self-onboard, send money and invest the same day. So it's very seamless. We use it on WhatsApp. We have our app. We have website. We have a portal. So the ease and convenience of investing. And this is what I said. This is the next horizon. You are not going to tell a Gen Z to walk to our premises here. They want to invest where they are. And in fact, they will probably never meet a representative of Britam anymore. Yeah? Unless there is a serious problem or they want something, really something different. But we have investors who we say, I've invested with you for the last 3 years, but they even don't know where Britam is. They just know that Britam is a brand that has existed for the last 60 years and we trust it. So what we've done is that convenience of investing and ensuring that we invest, we look out for them. Yeah, we look out for them in terms of risk management, portfolio management is very robust, so that at least they have very good returns.
All right.
Yeah.
We've been having a conversation with the man in charge of Britam Asset Managers, Mr. Barack Obatsa, covering a raft of issues, starting with the money market fund landscape, which we are all enthusiastic about. We have discussed special funds, we've discussed dollar-denominated funds, and finally have closed on the question of real estate. And remember, they're rolling out a new strategy covering the next 5 years, so keep an eye for all the latest on Business Redefined.